at InTheMoneyStocks.com. Watch pro traders in real time as they trade, navigate the markets, even view their exact desktop screen on yours live. Start your free trial right now and trade with the pros instantly. Go to InTheMoneyStocks.com. That's InTheMoneyStocks.com. InTheMoneyStocks.com.
Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. I've got Nick Santiago, President and CEO of InTheMoneyStocks.com with me right now. Nick, how you doing?
Very good, Michael. Great to be back.
Okay, I'm glad you're here, too, because you can make some sense out of all of this stuff that's got everybody confused. You want to start us off with what, Apple?
We could start off with Apple. Apple, as you know, has had a big sell-off, really, since reaching that 700 level. Basically on the 21st of September, we talked about a decline. Since that time, we were looking for a pullback into the 636 level. We've exceeded that to the downside, and now you have earnings today. So everybody's a little bit overly bearish on Apple at the moment, so there's always a chance of a bounce. But either way, there's a lot of technical damage done on the daily chart. The stock now trading below the 20 and the 50 moving averages, which is never a strong technical position, but it's still holding the daily chart 200 MA, which is around 586. So I wouldn't be so concerned with Apple's earnings tonight. I'd watch this thing over the next week or so. Right now you got a bearish base being built. If it can build more of a bearish base, the stock wants to go lower. And, if it breaks with conviction, when I think it can, really the 597 level is the big area right now. 500's in the 500 even numbers in the sights.
Okay, all right. And do you have any kind of cyclical analysis to go along with that? I mean, in other words, by the end of the year, sometime next year, what are your thoughts?
Oh, no. This would happen quickly. So, basically it's just seeing what kind of reaction you get now. If Apple can actually trade back and recapture the 20-day moving average on the daily chart, then the stock, is fine. It's going to be in a range for a while, and that's what I think is possible at the moment. But, by 2013, either way, this stock's going to probably come under distribution again, just looking how it's come off of the highs. So right now, we'll see how it plays out. I'm a little bit unsure exactly what we're looking at as far as time frame goes, but I would say sometime in 2013, I would expect this stock to probably trade much lower.
Okay, got it. What about Google, the other titan?
Yeah, now Google is the other one that really, last Thursday we talked about it, I think, as it was happening right on your show, the stock was halted. This stock has had a terrible reaction. It closed below the 680 level. It's now putting in sideways consolidation. If this one can base sideways for maybe another 2 or 3 weeks, this stock is setting up to go a lot lower as well. And, if you take a look at a big weekly chart, I mean, the big support level on this thing is around $600. So I think traders need to be patient right now. We have the election ahead of us. There's really no real reason to, get overly bullish or bearish. Just trade short term and let the charts tell you what to do. But when I see stocks like Google sell off with a big wide range bar on a weekly chart from a high, that is telling you the stock ultimately wants to go lower.
Okay. And IYT?
Yeah, the IYT I bring up from time to time because it's so important because this is the transports. This is the iShares ETF, Dow Jones Transportation Index. The one thing you'll see is that this stock went up and tested the 92 level, I think on the 18th of October. It was also the 200-day moving average. Couldn't get through there, and it has backed down. So the IYT ultimately is still looking a little bit weak, especially with yesterday's big sell-off in the IYT. So this is telling me this thing wants to head back down towards that $86 level.
Okay, all right. Do you see this as a continuing trend or just a range-bound?
Just a range-bound trade, really. If you take a look at the weekly chart, and you could go back to January of 2012, you'll see how this thing has just slowly grinded lower, and 86 is still a significant support level.
Okay, well, being that you're not thinking that this is going to break out to the downside, that should give me some kind of optimism as we get into 2013 for where the market may go.
Well, yeah, I think you're still going to get, a market move to the upside after this correction is over. As you and I have spoken, we said after QE3 would be announced, and it came a little bit prematurely in my book, but it happened at a high. just turned into a sell the news type event. So after this year market settles in a little bit, there'll be another chance at the long side here, probably, after the elections, in my opinion.
Okay. All right. Fair enough. How about the U.S. dollar?
Well, the U.S. dollar is really the driving force behind every market move. If you just take a look at the U.S. dollar right now, it looks like that 81 level can be obtained shortly, but after that, I just don't see much more strength in the dollar after 81. So I think, traders that are watching this dollar, as I do, each and every day, you'll notice that we made a little bit of a higher low, I guess, on the 17th of October. That's higher than the September 14th low, and that's giving it an upside bias to around 81. Around 81, though, I just don't see the strength there past that level.
Okay. Now, once we hit that 81, should we hit it up in that area, are you thinking that that's when we're going to see a lot of people unload U.S. dollars, or is there something going to come out of the Fed and it's really going to make something different happen?
Well, I'm not really sure. What I think ultimately is going to happen with the dollar is 81. We're going to get the dollar is going to pull back. That ultimately will give the market a little bit of a bid. But until we take out this 78 level, I mean, the dollar still has a lot of support there, and that level has not been broken yet. So I think we're going to be somewhat range bound with the dollar as well.
Okay. All right. Let's talk about interest rates, because we're in a position where there's going to be a lot of movement there. What do you thought? What are your thoughts?
Well, I don't think interest rates are going to scream higher, but I do think in the short term, the 10-year interest rate can trade up to the 190 level or 1.9%. Ultimately, I really have a hard time seeing the 10-year note get above 10%. So right now, that's where I'm just trying to stay real short term with this. But, the way that the 10-year note has really come off the lows in July is pretty powerful. And, we'll just have to see how it reacts when it gets to the 1.9% level. Ultimately, with the Fed funds rate being at 0% until mid-2015, according to the Federal Reserve, how high can interest rates really go? That's the big question. So, we'll have to wait and see. But I think traders should just stay real micro right now. Don't look, too far out right now. Rates have been creeping up a little bit today. The 10-year note is trading at 1.82%, but I'm thinking 1.9% is probably where they're going to, put a short-term peak in.
Okay. All right. Now, circling all the way back into the S&P market here, I wanted to get your impression of what's going on with that, because when we started this thing, what we were looking at was a rally favors the incumbent, but now all of a sudden we may not have one going into elections. Walk me through that.
Well, to be honest, I'm not really a political guy. I'd like to see Romney win personally because I don't want to see my taxes go up. They're already high enough. But ultimately, I don't think it matters who wins the election. I think that the business cycle is the business cycle. And, the markets are penciled in to get, an end-of-year bounce and end-of-year rally, and I think that's what we're going to see. Whether or not we get a quick sell-off, whether the incumbent wins or Mitt Romney wins, is really remains to be seen. I'm unsure of that personally, but I just don't understand how, higher taxes and is a benefit ever. So, I'm probably the wrong person to ask because I'm just not in favor of more taxes or higher taxes. But I just don't understand how, at this stage of the game, that's a positive. Ultimately, the banks love President Obama, so we'll see how it plays out. Obama's a big fan of Ben Bernanke, and obviously Mitt Romney can't be happy with Ben Bernanke doing the quantitative easing ahead of an election, which I believe has given President Obama a big advantage. But I'm really unsure, Michael, how this is all going to shake out with the presidential election. I think the fiscal cliff is another topic, but the market doesn't even seem to be worried about it. At least I'm not seeing it on the charts. No,
it's definitely going to be a nail biter. But you'll be back before we go through elections. Give everybody a way to get into your trading room.
Yeah, come on over to InTheMoneyStocks.com. Take out a 7-day free trial on our research center. You'll get all of our nightly setups. You'll also get my cycle work. You'll get all of our nightly videos and a host of other charts and things that we're looking at each and every day. Or come over and try out our intraday stock chat. You can look at our desktop live and see everything that we're doing each and every day.
Do you have any events coming up besides the normal trading room?
Not right now. The next event, I believe, Michael, is going to be in mid-November. I think November 13th, if I'm not November. Let me make sure that's the right one. I believe it's going to be November 17th. We're going to hold an In the Money Stocks methodology webinar. That will be the next one.
All right. Well, thanks for keeping us on the right side of the market, Nick.
You're welcome, Michael. Have a great day, pal. Thank you.
You too. All right, everybody, that was Nick Santiago, President and CEO of InTheMoneyStocks.com. On the other side of the break.